Good morning, good afternoon, everyone. It's Ankit. Whenever or wherever you're watching this video, thank you for subscribing and taking the time out of your busy schedule to watch today's video. I hope everyone's having the best day or the best week of their life. If you found value in today's video, make sure to hit the subscribe button for more videos like this. Most of my videos are about investing, health, and life. Today's video is going to be about REIT sectors to keep on your radar. REITs pay out nice dividends, and they're supposed to pay out nice dividends because they're supposed to pay 90% back to the shareholders. So this is a good opportunity for you to hold these REIT stocks and get paid every month, quarterly, or whenever they pay out their dividends. Leave a comment below with what your favorite REIT stock is and why. Let's try to hit 7,000 subscribers in 7 months. With all that out of the way, let's get into today's video and talk about these REITs. The first type of REIT I want to talk about is data centers and cell towers. So these three stocks will have to deal with data centers and cell towers. So let's talk about these three stocks. First on our list is Digital Realty Trust, DLR. It's currently trading at 131.19. The market cap for it is 37.35 billion. The PE ratio is 27.20. It does pay a nice dividends of 3.72. So DRT is a real estate investment trust that investors or invests in carrier neutral data centers and provides co-locations and peering services. Let's look at their financials. And as you can see, they're beating earnings. They did miss the EPS for Q4 of 2021 by 35%. In December, they also did really well. In September 2021, they also did well. But right now, it looks like they're missing net income, diluted EPS, net profit margins are down. Change in cash is also down, which is a little bit alarming. When you go back to the chart and you see the 1 year, you can see it's down 11%. When you look at the 5 year, it's up 14. When you look at the max, when you zoom out of the way, you can see it's up 193%. Number 2, we have Crown Castle International Corporation, CCI, which is trading at 176.49. When you zoom out and you look at the max chart, you can see it's up 1,257%. Its headquarters is in Houston, Texas. Let's look at the year. For the year, it's down 2.55%. It does pay a nice dividends of 3.33%. PE ratio is kind of high, 52.50. The market cap is 76 billion. Let's look at their financials. And if you look at their financials, they are doing really good, but the net change in cash is kind of alarming because it is down 71%. It is beating EPS and revenue. In December, it was down in all these net income, EPS, net profit margin, and net change in cash. It was also down. It was doing great in September. And in June 2021, it was also doing great other than the net change in cash. So this will be another stock when it hits a nice price that you could probably buy and get nice dividends for. And as you can look at when you max out the chart, you can see it's been going up constantly, and we're always going to need cell towers and data centers as we're, data-driven companies are more and more important nowadays than ever. And the third stock that we're going to have for this sector is American Tower, AMT, which is currently trading at 232.66. It is up all time right now, 1,238.67%. The dividend yield is 2.41%. The PE ratio is 40.25. The market cap is 106 billion. And this is another great REIT that pays out nice dividends. When you look at their balance sheets, net profit margin is down 10%. Operating income is down 14.64%. Net change in cash, negative 71.9. It's down 154%, which is alarming. It did beat earnings Q1 of 2022 The EPS, they beat it by 38%. The revenue, they beat it by 1.82%. They did miss EPS in Q4 2021 by negative 35%, but they did beat revenue. When you go back and you look at the chart, let's look at the 1 year. It is down almost 6%. So this will be the last stock for this sector. So let's go into the next sector. Number 2 for REIT sectors, we have Experiential. So these 3 stocks will be under this sector. Stock under Experimental Group or sector is Simon Property Groups Inc. SPG. Simon Property Groups is an American real estate investment trust that invests in shopping malls, outlets, and community and lifestyle centers. It is the largest owners of shopping malls in the United States. It's headquartered in Indiana. It's currently trading at 116.78. It has a 38 billion market cap. The PE ratio is 17.23. The dividends is 5.82. And when you look at their financials, they are down in net income and diluted EPS and net profit margin. They did miss EPS last quarter Q1 of 2022, but they did beat revenue by 4.47%. The first stock we have under experiential stocks or Experiential REIT is VICI. VICI Properties Inc. It is currently trading at $28.73. It does pay a nice dividends of 5%. The PE ratio is a good amount, 17.77. The market cap is $27 billion. And then this specializes in properties like casino properties, which are based in New York. So let's look at their financials. And as you can see, their financials are all down. They have missed earnings last 3 quarters, which is kind of alarming. But let's look at the year chart. It is down 7%. Over the 5 years, it is up 59% though. And the max out chart, and it's up 59% as well. Next we have is EPR. EPR Properties, formerly known as Entertainment Properties Trust, is a real estate investment trust based in Kansas. And it does amusement parks, movie theaters, ski resorts, and other entertainment properties. It has 353 properties as of 2022. It does pay a nice dividends of 6.58. It does have a high PE ratio of 33.19. Market cap is $3 billion. Let's look at the 1 year chart. It is up 4.69%. Over the 5 years, it is down 30%. And when you zoom out the whole chart, it's up 156%. So let's look at, when you click more, let's look at what their financials look like. And as you can see, their financials look decent. They are up on a lot of things. They are down in cash and equivalents, 39%. Cost of revenue is down 8%, almost 9%. REIT sector we are going to talk about is cannabis. So let's talk about these 3 cannabis stocks that you can invest in to get dividends. The next cannabis stock we have is Power REIT, PW, which is currently trading at $23.17. Though this one does not pay dividends, it is at a low PE ratio of 16.84. The market cap is $78 million. And it is fairly new company, so let's see if they have financials. And they do. And as you can see, their financials are very bad. They're hurting. Everything is down except the revenue. So this could be very alarming for this company. And it doesn't pay no dividends, so I can see why they don't pay no dividends. Next we have AFC Gamma. AFCG is their ticker, which is currently trading at $17.83. The dividend does pay out a nice dividend, 12.34%. PE ratio is 10.24. Market cap is 352 million. Let's look at their 1 year before we go to their financials. They are down almost 22% for the past year. In the past 5 years, is down negative 22.48%. All time is down negative 22.48. When you look at their financials, net change in cash is down, which is alarming. 138%. They are missing a lot of earnings. When you're talking about EPS, they are beating revenues, but they did miss it in Q4 of 2021. The first stock under cannabis is Innovative Industrial Properties, Inc., IIPR, which is currently trading at 138.47. And when you look at their market cap, it is 3.87 billion. The PE ratio is 28.61. It pays a nice dividends of 5.06%. The 1 year chart shows that it is down 19%. The 5 year chart shows it is up 675.3%. Let me correct that. It is up 675.31%. And over the max, it's up 650. So as you know, there's been a lot of hype around cannabis and what they're doing and all the different stuff, legalizing it. They did miss EPS the last 2 quarters. They did beat revenue. Their net change in cash is down a lot, 968%. Net profit margins are down 10%. So that is a little bit alarming. But we'll see what they're going to do. And it does still pay out their dividends, so that's a good thing. Next REIT sector we're going to talk about is triple net lease. When it comes to triple net lease, Reality Income is probably the first stock you can think about. It's trading under ticker O. It is trading at 67.41 right now. The market cap for it is 40.55 billion. The PE ratio is it's high. It's 66.07. The dividend yield is 4.40%. When you look at the 1 year chart, it is up 6.44%. When you look at the 5 year chart, it is up 28.42%. When you look at the max chart, you can see that it's up 707.31%. When you look at the financials, their financials are doing great. Everything's up. The net change in cash is alarming, but they could be probably buying assets in where it's organized, which is Maryland, and it's headquartered in San Diego. So you can see it buying assets. Maybe that's why the balance for the net change in cash is down. It did miss EPS in Q1 of 2022, Q4 of 2021, and Q2 of 2021. It missed revenue in Q4 of 2021, as you can see. So these are a little bit alarming because it is missing a lot of earnings, and it missed it by a lot in Q4 2021. And the last stock under triple net lease is STOR Capital Corporation, STOR under ticker. It is trading at 27.38. It does pay a nice dividends of 5.62%. The PE ratio is 24.87, which is still high. The market cap is 7.68 billion. When you look at the 1 year chart, it is down 18%. When you look at the 5 year chart, it's up 34%. When you look at the max chart, it's up 37%. When you look at their balance sheet, they have been beating earnings the last 2 quarters. Their net change in cash is down 30%, which is alarming. The cost of revenue is down 40%. It did miss revenue in Q3 of 2021. So the next one we have is WP Carry for triple net lease, which is trading under ticker WPC, which is trading at right now 81.34. It does pay a nice dividends of 5.20%. The PE ratio is high, 29.53. The market cap is 15.51 billion. When you look at the year chart, it's up 10%. When you look at the 5 year chart, up 27%. And when you look at the max chart, up 276%. This is probably one of the stocks I would consider when it dips to buy it, because it does pay a nice dividends, but right now it's just too high for my price. Let's look at their financials, and as you can see, their financials look amazing. This is why this is one of my favorite triple net lease REIT stocks, and something I want to add to my portfolio. And I had it in my portfolio previously, but I removed it because I saw the PE ratio is too high, and I found other stocks that I wanted to invest in, so I need the capital. But as you can see, their earnings are great, and when it does dip again, I'll find a good entry point and buy some. The second stock under office space is going to be ONL, which is currently trading at $12.82. It does pay a nice dividends of 3.12. Market cap $725 million. When you look at the 1-year chart, you can see that it's down 48%. 5-year chart is down 48%. Max chart is down 48%. It's probably because the company's not making any money. It's not profiting. It's probably paying out all the money to the shareholders, which can be alarming. And you know, with all the things that are happening, office space is kind of died down as people are working more remote. So that could be another factor that the stock is down. And the last stock we have to talk about is Easterly Government Properties, DEA, which pays out nice dividends of 5.60%. The PE ratio is high, 54.64. Market cap is 1.72 billion. Year to date, it is down 18%. 1-year chart is down 6%. 5-year chart is down 4.83%, close to 5%. Max out, it's up 22%. When you go look at their financials, their net change in cash is down 83%, which is alarming. Net profit margins are also down 6%. They are missing a lot of EPSs. They didn't even announce the one in Q1 of 2022. They missed the last 2 revenues. So this is probably a stock that I wouldn't consider buying yet until they show that they will make some nice profits and their balance sheet looks amazing. The last type of REIT sector I want to talk about is office spaces. So let's look at the top 3 for office spaces. First off, we have Boston Properties Inc., trading under ticker BXP. It's currently trading at $112.71. Dividends, it pays out 3.48%. The PE ratio is 32.23. Market cap is 17.66 billion. It's headquartered in Boston, obviously, as you can see, Boston Properties. The 1-year chart, it's only up 2.33%. The 5-year chart is down 6.86%. Over the max chart, it is up 327%. Let's look at their financials. Their financials are all up. Net change in cash is up 97.56%. It did beat all their earnings. So this is another great stock to maybe you want to add to your portfolio if you want to get dividends. But I would find a good entry point and wait for it to dip before you enter into this position.